Hi, good morning, everyone. This is for Accounting 219 Managerial Accounting students at Alabama A&M University. Hi, this is Waris Karim again, this time with the foundational 15 of Chapter 3. Chapter 3, Job Order Costing, Cost Flows, and External Reporting. So guys, you can see that we are quite stuck with these two chapters. We need to move on to Chapter 4, Process Costing, and Chapter 5, CBP, and eventually to Chapter 7 and advanced chapters. But what is important is that to get up to speed in doing the assignments, doing the quizzes, so that you get the confidence. And so this is part of your confidence building measure. I am going to discuss the foundational 15 of Chapter 3 this morning. And I hope you go over the material with me and enjoy the discussions, and more importantly, learn how to do it yourselves. So that independence is important. The big picture of chapters 2 and 3 involves just a few things. I think 4 or 5 things, that there is going to be material labor, direct labor, that is, plus manufacturing overhead applied. So these three together is going to determine the manufacturing cost or total manufacturing cost. Number 4th item is that there will be a predetermined overhead rate. Without it, you won't be able to apply any overhead on your projects or job sites or jobs. So there will rarely be one job, but even if there is just one, we don't just accumulate overhead. We accumulate all the overhead of the organization and then apply based on the hours or based on the denominator. So an understanding of the denominator, an understanding of predetermined factory overhead rate, and particularly what is the need to have a predetermined overhead rate. I've discussed it in my prior videos, and if you like, I can do another one on those. But remember that in the problems that you're going to solve, you will have material information. So find out how much material has been used, not how much has been procured, but how much has been used, how much labor has been applied or how much labor has been used, and how much material overhead has been applied. Remember, the difference between applied and overhead, applied and used, is eventually mitigated. That difference is eventually taken care of in the form of over-applied or under-applied overhead. So there won't be a big mistake as far as cost of goods sold is concerned, even if you do not apply the predetermined rate, if you just throw in everything, all the overhead that you're using to manufacture certain things. But the process of doing the accounting for it is that we need, of course, the ending inventory of work in process, raw materials, and finished goods. And the final number is, of course, cost of goods sold. So until we get to the final number, we don't mitigate the difference between factory or manufacturing overhead used and applied. Anyway, so let's leave these discussions aside. Let's get to the problem. The problem is based on a company called Bunnell Corporation. For you, they've given the beginning raw materials inventory, work in process inventory, and finished goods inventory. So the beginning inventory of all three are given as $40,000, $18,000, and $35,000 respectively. A predetermined overhead rate has been established at $16.25 based on an estimated total overhead of $650,000 and an estimated hours of 40,000 direct labor hours. So you can calculate it yourselves. Just divide $650,000 by 40,000. All right, now let's get to the questions. There will be 15 small, brief questions together to give a wrap up, to give a kind of a complete run through the chapter. So the first question was, what is the journal entry to record the materials applied or materials used in this project? So you tell me what that entry is going to be. Materials used is received by work in process. So debit work in process, credit raw materials inventory. So here it is. I've done the solutions for you. So this is the little snap of the foundational 15 from chapter 3. You can see the beginning inventories and answer to the first requirement. Debit work in process for the materials applied or used, and credit raw materials. So in this connection, let me add one journal entry. What is the entry to record the procurement? Entry journal materials procure. So when you procure, you receive raw materials. So debit raw materials inventory and credit either accounts payable or cash. Cash is when you pay for it. Accounts payable is when you didn't pay for it. So in this question, they haven't asked for that, but that is also a journal entry that you need to learn. The entry to record the procurement of materials. Debit raw materials inventory, credit accounts payable or cash. All right. Then this one, entry to record materials used, work in process, and raw materials. So all the materials used, labor used, and manufacturing overhead applied, these three are going to be thrown into work in process. Don't forget, they will be all included in work in process. And the three together is going to be total manufacturing cost. All right. Next question was find out. Let me tell you what is the ending balance of raw materials. That is the next question. Ending balance of raw materials. So we know the beginning balance. So do the work here. We have work backward. We have the beginning balance, beginning raw materials of $40,000. Add raw materials purchased, procured during the period, which is $510,000. That gives you raw materials available for use. You can see available for use 550 less raw materials ending balance. Raw materials ending is what they asked us to calculate. We don't know it, but we know raw materials used. So they're nice with us. They gave us raw materials used in production. So they gave us this. You can see. So this is the continuation of that second requirement. So I go back to raw materials available for use, $550,000 minus ending raw materials gives you raw materials actually used in the production process. So raw materials used was 480. So from 550, if you have used only 480, then how much is left over? Think again. You had available of $550,000 worth of materials, and of the total materials you have used only $480,000. So the remaining 70,000 must be raw materials. Here's the working. The remaining $70,000 must be raw materials. Raw materials in ending inventory or unused raw materials at the end of the period. Unused raw materials, and that is what is called ending raw materials inventory at the end of the period. Okay, perfect. So that's number 2. Here's a little bit of working backwards. The formula is beginning raw materials plus purchases gives you available, what's available, minus ending gives you what's used. So if you know what's used, then you should be able to work backwards and find out how much was in ending inventory. You should be able to do that. All right, number 3. The third question is, what is the journal entry to record the labor costs incurred during the year? What's the entry for labor costs incurred? Again, labor goes into work in process, so debit work in process, credit, wages, payable, salaries and wages payable, or it could also be cash if you have paid for it. So this is the answer to requirement 3. Very small. Debit work in process for labor used, and credit wages payable. See here, that's your answer to requirement 3. Requirement 4 is, what is the total amount of manufacturing overhead applied? Manufacturing overhead applied is one of the easiest ones. The predetermined overhead rate is given. So multiply that $16.25 predetermined overhead rate, remember from the first page, predetermined overhead rate, multiply that by the number of hours we have used, the number of hours that labor have been working. So the labor in this project have been working for $41,000, although our denominator level was 40. We thought 40,000 hours of work would be enough, but we ended up working for 41,000 hours. So 41,000 multiplied by $16.25 gives you total manufacturing overhead applied to this project. So that's the answer, $666,250. That's applied. So, and at the same time, if let's see if they asked us the journal entry. What is the journal entry? What is the next question is number 5. What is the total manufacturing cost added to work in process during the year? So you tell me, what is the total manufacturing cost added during the year to this project? Total manufacturing cost includes direct materials used, labor used, and manufacturing overhead applied. Okay, so materials used, you know how much there was. Here it is, $480,000. Labor used, $600,000, and overhead applied was $666,250. So the three together is our total manufacturing cost. There's a little bit of a mess here, but you can add the three numbers and write it cleanly. So it's $1,746,250. That's the total manufacturing cost. Number 6, what is the journal entry to record the transfer of completed jobs that is referred to in item number G above? So in G, we are told that job costing $1,680,000 to manufacture according to their job cost sheets were completed during the year. So jobs costing this was completed and that job has been transferred. That's requirement number 6. So let's see, what's the number 6? Once jobs are completed jobs are transferred to the showroom as finished goods, we debit finished goods. So debit finished goods inventory and credit work in process. Where does it come from? It comes from the process. It comes from the factory. Anything that goes in the factory or in the manufacturing plant is work in process. Anything that goes out from there would be work in process credit, and debit would be where it goes into. It goes into the showrooms, into our showrooms or distribution centers, or finished goods warehouse. So debit finished goods inventory, credit is work in process, and the amount is the total jobs completed, and the amount is given in number G. But we're going to calculate it. This amount is actually cost of goods manufactured. Cost of goods manufactured. Once they're manufactured, they're transferred onto the finished goods warehouse. All right, but at this point, I'd like you to think of other journal entries. For example, what is the entry to record the application of overhead? So again, debit, work in process, credit, manufacturing overhead. Remember. All right, and this is the entry to transfer completed goods to the warehouse. But in the meantime, in the middle, there is a difference, as I keep saying, that there is a difference between total manufacturing cost and cost of goods manufactured. There is no journal entry needed to have this transition. All you have to do is total manufacturing cost with total manufacturing cost, add beginning work in process and subtract ending work in process. So that will give you what's manufactured. You have added the work in process that you have inherited, and you have subtracted the work in process that you are leaving behind, and then whatever is going to the next step is what is manufactured, what is ready for sale or ready to sell. All right, number 7. The question is, what is the ending balance of work in process? These are, if you know the mechanics, it would be at your fingertips. What is the ending work in process? So tell me how do it? We do beginning work in process. Beginning work in process was just given at the beginning of the question. The beginning work in process was $18,000. So put that in, beginning work in process plus that total manufacturing cost, the number that you just had, the total of those three, which was total manufacturing cost was 1,746,250. 1,746,250. So $18,000 plus total manufacturing cost of 1,746,250 minus ending. So ending is not given, but the cost of goods manufactured has been given as in G. So they want us to do some forensics, and we can do it here. You can see I have done it here in number 7. So beginning work in process of 18 plus total manufacturing cost of 1.746 gives you total manufacturing cost to account for. This is more like what's available to transfer to finished goods. So that's the total manufacturing cost to account for minus ending work in process, not given, but the final number is given. Cost of goods manufactured is given, 1.68. So we work backwards and find out that our closing work in process inventory was actually $84,250. $84,250. So working backwards, this is missing. So something minus something gives you this. So this should be the difference. If you separate this from this, or if you add these two, you get this. So find out the unknown. You see, say A minus B equals to C. That means C plus B should be equal to A. And that's how you calculate the missing, compute the missing number, find out the missing number. So that's our ending work in process, closing work in process. Number 8. What is the total amount of actual manufacturing overhead cost incurred during the year? Total amount of actual manufacturing overhead. How am I going to tell you? We can tell you because if you go through the question, there are bits of information everywhere. Total manufacturing cost incurred during the year, not the applied ones. That, in other words, remember we accumulate all the manufacturing overheads. So, sorry, not total manufacturing cost. I was wrong there. Total manufacturing overhead incurred during the year. So just add all the indirect expenses. If there was any indirect material, that would be the first candidate. In this question, there is none. So I'd theoretically go like this: indirect material plus indirect labor plus indirect expenses, or all the expenses. So manufacturing depreciation, like depreciation of the factory building, of the factory equipment, so the total plant, any utilities, any salaries and wages associated with the manufacturing process, any, not the labor, apart from the direct labor. So all the indirect labor like supervisory labor or supervisory workforce, the security guys, the testing guys, the inspection guys, the quality control guys, even any research or development that goes within the plant, all those. So that would be the total of manufacturing overhead. So I have, in this question, there are not many. So you can see, first was actual manufacturing overhead incurred. We find indirect labor. There was no indirect material, so indirect material was 0. Indirect labor was $150,000, and various other manufacturing overhead, various manufacturing overhead. They put it all in a catch-all number of 500,000. So 500 plus 150 is $650,000. So that's the total manufacturing cost incurred during the year, 650. And how much was applied? 666,250. So there you can see there is an over-applied overhead, but we'll get to that later. All right. Number 9. Well, before I could sense it, it's already here. Applied overhead was 666 minus actual overhead of 650 gives you over-applied overhead. In this case, there is over-applied overhead. What is the journal entry for over-applied overhead? Tell me. The journal entry for over-applied over-application is a good thing. I said it reduces our cost of goods sold. So for over-applied overhead, the entry is credit cost of goods sold, and debit manufacturing overhead. All right. Next is number 10. What's the question? What is the cost of goods available for sale during the period? Cost of goods available for sale is found in the formula beginning finished goods plus cost of goods manufactured minus ending finished goods, or cost of goods manufactured gives you cost of goods available for sale, then minus finished goods gives you cost of goods sold. So we do that. You see cost of goods manufactured already given 1.680. Remember the number G there is in your question. So they said that $1.68 million worth of goods have been transferred to finished goods. So that's what has been manufactured. With that, we had some beginning finished goods inventory. We had some in our inventory that was $35,000. So we add those 35 plus what's been manufactured. So that 35 plus what's been manufactured is your available, is total manufacturing cost to account for minus work in process. Ending inventory was cost of goods manufactured. So cost of goods manufactured is 1.68. With that, you add FGI beginning. So beginning FGI would give you a cost of goods available for sale. And then if you subtract ending FGI or ending finished goods inventory, you would have cost of goods sold. That may be in the cards soon. What is the journal entry to record the cost of goods sold referred to in HFR? What is the entry for cost of goods sold? Debit cost of goods sold, credit finished goods inventory. Here it is. Debit COGS, finished, credit FGI, finished goods inventory. That's number 11. And number 12, what is the journal entry? Sorry, what is the ending balance of finished goods? Not a forensic accounting or a little working backwards. So what's the ending finished goods? So we have beginning finished goods of $35,000 plus we received 1680, 1.68 million from our factory to the showrooms. So that's COGS available for sale. That is just calculated here, same number 1715